It is 3 a.m. on Saturday, March 7th, 2026. I am looking at a chart that looks less like a financial market and more like a crime scene. Silver closed Friday at exactly 84.33. That number is important, remember it. Right now, the Wall Street bankers are asleep. They are in their big houses in the Hamptons. They are resting in their penthouses in Manhattan. They think they survived the week. They think the panic is over. They spent all Friday afternoon buying silver, pushing the price from $70 up to that $84 mark. They think the danger has passed. They think the weekend is a safe zone where nothing bad can happen. They are wrong. They are catastrophically wrong. While the bankers sleep, a financial bomb is ticking, and the timer hits zero tomorrow night. Here is what is happening while the American markets are turned off. The Western world thinks the game pauses on the weekend. It does not. The Eastern Hemisphere is wide awake, and they are getting ready to launch the biggest raid on physical silver we have ever seen. I need to paint a picture for you. This isn't just about numbers on a screen. This is about real things moving in the real world, or rather, not moving. The Strait of Hormuz is closed. This is the most important choke point for oil on Earth. Usually 21 million barrels of oil flow through there every single day. Right now, zero. Nothing is moving. Ships are stuck. Insurance companies are terrified. They won't cover the cargo. Think of it like a clogged artery in the human body. When the blood stops, a heart attack happens. This matters for silver because the supply chain is broken. The actual bars of gold and silver, the heavy stuff, it moves from refineries to vaults. A lot of that happens in Dubai. But right now, that metal is frozen. It is sitting in warehouses in the desert. It cannot get to London, it cannot get to New York, it cannot get to Zurich. The logistics network is dead. Now here is the secret that Wall Street is ignoring. The Western markets, the places where they trade paper contracts, are closed. The COMEX is locked until Monday morning. That is their playground. That is where they print fake paper silver to control the price. They pretend they have millions of ounces they don't actually have. It's like selling the same car to 100 different people, but they can't play that game on the weekend. Their computers are off. Their algorithms are asleep. But the Shanghai Gold Exchange in China, it opens tomorrow night, Sunday night. And here's the difference. The Shanghai market does not play with paper. They play with physical metal, real bars, real delivery. China has spent the last 48 hours watching the world fall apart. They saw the oil stop flowing. They saw the panic on Friday. They know the supply chain is broken. They are not stupid. They know that paper contracts are worthless if you can't get the metal. So when that bell rings in Shanghai tomorrow night, they are going to buy. And they are going to buy everything. They are going to bid for every single ounce of physical silver left on the planet. They need to protect their wealth from this energy crisis. They are dumping cash and grabbing hard assets. This is the nightmare scenario for the banks. Wall Street cannot stop this. They cannot print paper contracts on a Sunday to push the price down. Their hands are tied. They have to sit there and watch. This Asian buying frenzy is going to drain the physical supply. What happens next? The price is going to gap up violently. That means when you go to bed, silver is 84s. When you wake up, it might be $100. The price jumps while the store is closed. Bloomberg won't tell you this. CNBC won't tell you this. They want you to stay calm. But if you wait for the news to tell you what happened on Monday morning, you are already the victim. By the time a smiling news anchor tells you silver had a strong open, the move is over. You missed it. The price will have jumped $10, maybe $20 while you were sleeping. This isn't financial advice. This is a survival guide for a burning building. You need to do your own research, but you have to ask yourself a simple question. Do you trust the people who have been destroying the value of your money for 50 years? Or do you trust your own eyes? So I want to know right now, are you going to be awake tomorrow night? Will you be watching the Shanghai market open, or are you going to wait for Wall Street to permit you to panic on Monday? If you are sitting in cash, waiting for your financial advisor to call you back, you are in the danger zone. Tell me in the comments, do you have the metal in your hand, or are you holding paper promises? Because the shock starts tomorrow. Now let me explain exactly how this machine works. Because what happens tomorrow night is not magic, it is mechanics, it is simple math, and if you understand how the silver market really works, you will see why this Sunday night is going to be a disaster for anyone who does not hold the metal in their hands. We have two worlds here, the West and the East. They play by completely different rules. In the West, that means Wall Street, London, and the COMEX. They trade paper. They trade IOUs. Let's say I want to sell you 1 million ounces of silver. In the West, I don't need the silver. I just need a printer. I can write a contract that says 1 million ounces. I sell it to you. Then I write another one and another one. I can sell the same imaginary silver to 50 different people. It is a casino. It is a game of musical chairs. They do this to control the price. When the price gets too high, they just print more paper contracts and dump them on the market. It tricks the world into thinking there's plenty of silver, but it is a lie. It is a phantom market. But China, the Shanghai Gold Exchange, they do not play that game. In Shanghai, the rule is simple. You buy it, you take it. If you buy silver on the Shanghai Exchange, you are buying the actual bar. That metal must be delivered to a vault. You cannot photocopy a silver bar. You cannot fake heavy metal. It is 1-to-1. One buyer, one bar. This means the price in Shanghai is the real price. It shows you what is actually happening in the physical world. It strips away the Wall Street lies. But here's the scary part. Here's the trap that is about to snap shut. There is a specific reason why the Chinese billionaires are going to go all in tomorrow night. They saw a signal on Friday that terrified them. I am going to explain exactly what that signal means for your bank account in just a moment and why it guarantees the price will skyrocket. But first, you have to understand the timing. The Eastern superpowers, China, the Middle East, the big sovereign funds, they watched the panic on Friday. They saw silver jump from $79 to $84 in just a few hours. That is a massive move. It is not normal. They know what it means. It means the West is running on fumes. It means the warehouses in London and New York are empty. The paper game is breaking because there is no metal left to back it up. So, connect the dots. The Strait of Hormuz is closed. Oil is not moving. The price of energy is exploding. If you are a billionaire in Asia and you see your currency about to die because of an oil crisis, what do? You run to safety. You buy gold. You buy silver. You buy things that cannot be printed. Tomorrow night, all that money is going to rush into the Shanghai market at the same time. It is a flood of money chasing a tiny amount of metal. And here's the kicker. This is the most important part. Usually, when the price jumps, Wall Street steps in. They turn on their computers. They print $1 billion worth of paper silver. They flood the market to push the price back down. They act like a fire department putting out a fire. But tomorrow night, the fire department is closed. It is Sunday. The COMEX is locked. The algorithms are turned off. The bankers are golfing. There is nobody to stop the price from rising. There is no paper manipulation to absorb the blow. It is pure, raw demand hitting a market with zero artificial supply. When that happens, the price has only one place to go, up, and it goes up fast. It gaps up. This isn't a guess. This is how markets work. When everyone wants to buy, and the only guy who sells fake contracts is asleep, the price explodes. I stay up late on weekends to track this stuff. I watch the global flows so you don't have to. I'm not paid by the banks to tell you everything is fine. I am here telling you the house is on fire, while they tell you to go back to sleep. If this helps you prepare for the chaos tomorrow morning, hit that super thanks button below. It keeps the lights on here while I analyze the end of the financial system as we know it. So, what exactly happens in the next 24 hours? Let me be very clear. This is not going to be polite. This is not going to be smooth. Silver is not going to gently float from $84 up to $85. That is not how a panic works. That is not how a broken market works. When the Shanghai Gold Exchange opens tomorrow night, you are going to see a gap up. What is a gap up? It is financial teleportation. 1 second, the price is $84, you blink your eyes, you look back at the screen. The price is $90, boom, $6, gone. Just like that. Why does this happen? It is because of the order book. Imagine a line of people waiting to sell. One guy says, I'll sell at 85. Another says, I'll sell at 86. But there are only a few of them. When the Chinese billionaires step in with their massive buy orders, they eat through that line in a split second. They buy everything. The price rips through the ceiling until it finds someone willing to sell way higher. You have to understand the difference in size here. Think of the COMEX in New York like the Pacific Ocean. It is huge. You can dump 1 million gallons of water into it, and the sea level doesn't change. That is a liquid market. But Shanghai on a Sunday night, that is a kiddie pool. If you dump a bucket of water into a kiddie pool, it splashes everywhere. It overflows. The market is thin. It takes very little money to move the price a long way. The same amount of buying pressure creates a massive wave. And the Chinese know this. They are smart. They know that if they push hard on a Sunday night while the Americans are sleeping, they can send the price to the moon. But here's the thing that nobody is talking about. There is a specific number that silver is programmed to hit, a price target that has been hidden in the chart since the 1980s. I'm going to tell you exactly what that number is in a minute. It sounds impossible, but the math proves it is inevitable. But first, you have to look at history, because we have seen this movie before. Go back to January 1980. Two brothers from Texas, the Hunt brothers, decided they didn't want paper money anymore. They wanted silver, real silver. They started buying everything. They drained the vaults. The price went to $50 an ounce. Now, $50 doesn't sound like much today, but adjust that for inflation. That is over $200 an ounce in today's money. The banks were terrified. They had to change the rules of the game just to stop these two guys. They forced them to sell because the system was breaking. But the lesson is simple. When rich people demand physical delivery, the price explodes. Then look at 2011. Silver went from $18 to $49 in just 8 months. That is almost a 200% gain. And guess what? The world was peaceful back then. No major wars, no closed shipping lanes. Today, The Strait of Hormuz is closed. The supply chain is dead. The setup we have right now is 10 times more explosive than 2011. And finally, look at March 2020. This is the most important clue. The paper price of gold crashed on the screen. But try to buy a gold coin back then. You couldn't. Dealers were charging $400 over the spot price. The screen said one number, reality said another. That is called a dislocation. It means the paper price is a lie. The real price, the price to actually hold the metal, was way higher. We are seeing that again right now, except the starting price isn't 15 Rs, it is 84. If we apply that same math, if we take the panic premiums from 2020 and add them to today's price, we are looking at physical silver costing over $150 an ounce. That is not a guess. That is not fear-mongering. That is just math. That is taking what happened before and applying it to what is happening now. And all the signs are pointing to the same violent conclusion. Get ready for a violent move higher. I know what some of you are thinking. I can hear the skeptics already. But wait, the Shanghai price is always a little higher. That's normal. Stop right there. We are not talking about a 2% difference. We are not talking about business as usual. We are talking about the end of the world as we know it for the supply chain. This is a force majeure event. That is a fancy legal term. It means superior force. It is the loophole in the contract that lets the big guys say, sorry, I can't deliver your metal because of an act of God. And right now with the Strait of Hormuz closed, with ships stuck in the desert, that is exactly what is happening. The supply is frozen. It is stuck. When dealers cannot get the metal, they cannot honor the contract. When they cannot honor the contract, the price has to go up. It has to go up until people stop buying. But here is the problem. The buyers are not going to stop. The Chinese are not buying silver to make a quick buck. They are not flipping it like a house. They are buying it to survive. They are buying it because they know the dollar is dying. They know the Western banks are broke. This isn't a trade. This is an escape plan. You need to understand the big picture. The BRICS nations, Brazil, Russia, India, China, South Africa, have been planning this for years. In 2024, they told the world they were building a new system, a system that didn't use the US dollar, a system backed by gold. The West laughed. CNBC called it a joke. They said it would never happen. But in 2025, it went live. Suddenly, countries were trading oil and grain in their own money. No dollars. No American banks are taking a cut. And now, in 2026, we are seeing the consequences. Nobody wants our debt anymore. The Federal Reserve is trapped. They have $35 trillion in debt, and they can't pay the interest. They can't raise rates, or the government goes bankrupt. They can't lower rates, or inflation eats everyone alive. The BRICS nations know this. They smell blood in the water. So when the Shanghai Gold Exchange opens tomorrow night, it isn't just a few traders in a room. It is entire countries moving their money. It is a sovereign wealth fund. It is the oil kingdoms. It is a multi-trillion-dollar exodus out of the dollar and into hard assets. And they are doing it on a Sunday night, while Wall Street is asleep. But before I give you the exact timeline, the minute-by-minute breakdown of when the chaos starts, I need to warn you about something even more dangerous. There is a specific trap that Western banks have set for retail investors like you. A trap designed to steal your silver right before the price explodes. I'm going to show you how to spot it and how to avoid it in just a second. First, let's talk about the clock. If you want to watch this happen live, you need to be ready. It starts at 8 p.m. Eastern Time on Sunday night. That is 24 hours from now. Mark your calendar, set an alarm. At 9 p.m., the first big orders hit the system. You will see the price on the Shanghai Exchange start to twitch. It might take 30 minutes, it might take 30 seconds. But once that dam breaks, the water rushes in, the price is going to rip, and because the spot price is global, the price you see on your phone, on Kitco, on every dealer website, it will all change instantly. The COMEX doesn't open until Monday morning. That means for hours, the only game in town is Shanghai. And they are going to run the score up while the other team is still in the locker room. So here is what we are looking at. A 12-hour window, 12 hours where the price is moving in Asia and the Western paper market is handcuffed. The algorithmic suppression machine, offline. The market makers, asleep. The naked shorts, nowhere to be found. For 12 hours, the price of silver is going to do something it hasn't done in decades. It is going to move freely. It is going to find its true value based on actual supply and demand. And when the COMEX finally wakes up on Monday morning, they have a massive problem. Imagine this. Shanghai is trading at $95. The COMEX closed Friday at $84. If they open at $84, every trader on the planet is going to buy the cheap stuff in New York and sell it for a profit in Shanghai. Instant money. The gap will close in seconds. The COMEX has no choice. They have to open at whatever price Shanghai sets. They have lost control. This is the nightmare scenario for the big banks. This is what they have spent decades trying to stop. They manipulate the price with paper. They use high-frequency trading robots. They coordinate massive sell-offs to scare you. but they cannot manipulate a market that is closed. They cannot suppress a price in a country they do not control. That is why tomorrow night is so dangerous for them and so profitable for you. I am going to be tracking every single tick. I will be watching the volume the second the Shanghai Gold Exchange opens. Make sure you are subscribed to the bell on. You need that emergency alert. If you miss the breakout, you miss the move. And trust me, you do not want to miss this. We are not talking about a 1% drift. We are talking about a 10%, 15%, maybe 20% gap. This is the kind of move that changes your life overnight. If you are positioned correctly, you wake up rich. If you are sitting in cash, if you are holding bonds, you wake up poorer. But there is a hidden mechanism that is about to make this even worse. Something is happening in the plumbing of the financial system that nobody sees. It is called the repo market. Think of the repo market as the pawn shop for banks. Banks borrow cash overnight using government bonds as collateral. It is how they pay their bills. Right now, that pawn shop is running out of money. Interest rates in the repo market are spiking. That means banks are desperate for cash. They are selling everything they can to survive. Stocks, bonds, crypto. They are liquidating. Usually when banks sell everything, commodities crash too. But silver is different. Silver is money. Silver is a haven. So while they sell stocks, they buy silver. It is a rotation. Capital is fleeing the burning building and running into the vault. This is why silver is going up while the rest of the world is going down. And then there is the gamma squeeze. I know, gamma sounds like jargon. Let me make it simple. Imagine a snowball rolling down a hill. As it rolls, it gets bigger. As it gets bigger, it rolls faster. There are thousands of bets placed on silver hitting $85, $90, and $95. These are called call options. The people who sold these bets, the market makers, they are in trouble. If the price goes up, they lose money. So what do? They have to buy silver to cover their losses. If the price hits $85, they buy. That pushes the price to $90. Then they have to buy more. That pushes the price to $95. It is a feedback loop, a self-fulfilling prophecy. But here is the catch. The market makers are naked. They sold the bets, but they don't have the silver. And the futures market, where they usually buy to protect themselves, is closed. When the COMEX opens on Monday, they are going to panic. They have to buy everything in sight to cover their exposure. This panic buying will push the price even higher. It is a classic squeeze. And the trigger is set for tomorrow night. Think back to GameStop in 2021. Think back to Volkswagen in 2008. Those were short squeezes. The price went vertical because the people betting against it ran out of time. That is exactly what is about to happen to silver. But the real chaos, the real panic, it's going to happen at the retail level. It's going to happen on the websites where you buy your coins. Right now, if you go to APMEX, JM Bullion, or SD Bullion, you see something strange. They are charging $8 to $12 over the spot price for silver eagles. That is a high premium. It tells you that physical metal is already hard to find. But tomorrow night, when does the spot price gap up? Those premiums are going to explode. Why? Because dealers can't restock. The refineries are empty. The supply chain is broken. The inventory they have right now is all they have. So what do? They raise the price. They try to slow down the buying. I would not be shocked to see premiums hit $20, $25, maybe $30 over spot by Monday afternoon. I would not be surprised if dealers just shut down their websites. They might put up a sold out sign. They might limit you to 10 ounces. We saw this in 2020. We saw this in 2008. But the math is different this time. In 2020, the spot price was $15. Silver Eagles were selling for $38. That is a huge markup. Today, the starting line is $84. If we see even a fraction of that panic buying, we are looking at Silver Eagles costing $120, $130, maybe $140 an ounce. But wait, I know there's an elephant in the room. I can hear the question in your head. Why should I care about the price in Shanghai? I live in Texas. I live in Ohio. I can't sell my silver in China. Here's why it matters. The spot price is a global benchmark. It is like the temperature. If it is hot in the kitchen, the living room gets warm too. When Shanghai moves, London moves. When London moves, New York moves. When New York moves, your local coin shop changes its sign. The price you see on Kitco or Bloomberg isn't just one city. It is an average of the whole world. So yes, what happens in China tomorrow night absolutely affects the cash in your pocket in Des Moines, Iowa. It affects your net worth. It is all connected. Now, before I show you the final piece of this puzzle, the specific energy crisis that is driving this whole thing, I need you to understand one thing. This isn't just about silver. This is about oil. The Strait of Hormuz is closed. This is not a traffic jam. This is a heart attack for the global economy. You have Iran, Saudi Arabia, the Houthis, Israel, and the US military all in the same tiny waterway. And that waterway is closed. 21 million barrels of oil per day flow through there. or rather, they used to flow through there. Now, nothing. Oil is already above $120 a barrel. If this lasts a few more days, we could see $150, maybe $200. When oil hits $200, everything breaks. It costs more to ship food, it costs more to make cars, it costs more to heat your home. Inflation, real inflation, not the fake government numbers, goes to double digits. But silver loves inflation, silver loves chaos, and silver is the only life raft left. In just a moment, I am going to explain exactly how this oil shock forces the Federal Reserve to do something they promised they would never do, something that will send silver to $500 an ounce. But first, you need to understand the panic cycle. When inflation hits double digits, the game changes. People stop trusting cash. They panic. They run to safety. And right now, silver is the bargain of the century. Look at the gold to silver ratio. This is the most important number in finance. Historically, for every ounce of gold, there are 15 ounces of silver. That is the natural order. That is the balance. But today, that ratio is 90 to 1. That means silver is 6 times cheaper than it should be. It is on a massive discount. It is the cheapest asset on planet Earth. When people figure this out, when they realize they can buy a mountain of silver for the price of a molehill of gold, they are going to flood the market. And the market cannot handle it. The math is terrifyingly simple. We dig up about 850 million ounces a year. That sounds like a lot. It isn't. Industry, solar panels, electric cars, iPhones, they eat up 550 million ounces immediately. That leaves 300 million ounces for investors. That is nothing. That is a rounding error. Now imagine if just 1% of the world's wealth decides to move into physical silver. That is trillions of dollars fighting for a tiny pile of metal. It is a game of musical chairs, and there is only one chair left. The price has to explode. It has to go to 4 digits, $1,000, $2,000, maybe $5,000 an ounce. I know that sounds crazy. I know it sounds like hype, but grab a calculator, divide the money by the metal. The answer is not $84. The answer is $5,000. But there is a trap here, a trap that stops most people from getting rich. The problem. You see the price on your screen, and you think that is the real price. You think you can wait. Schatte, the desire. You want to buy at the bottom? You want to time it perfectly. The delay. But by the time the screen updates, it will be too late. I am going to tell you exactly how to bypass the fake price in just a second. But first, we need to look at the regime change. This Sunday night isn't just a blip on the radar. It is a revolution. We have been in a bull market since 2020, but it has been slow. It has been painful. Why? Because the banks have been holding it down. Imagine trying to hold a beach ball underwater. You can do it for a while, but your arms get tired. The pressure builds up. Eventually it slips. And when it slips, it shoots out of the water. That is silver right now. The paper price is the beach ball underwater. The physical price is the sky. This happened with gold in the 1970s. The US government said gold was 35s. They stamped it on the coins. They wrote it in the law books. But the free market said, no. The real price was $100, then $200, then $800. The government lost. Reality won. We are at that same breaking point. The price on your screen is a lie. It is unenforceable. There is no metal to back it up. So tomorrow night, the baton gets passed. It goes from New York to Shanghai, from the liars to the buyers, from the paper market to the physical market. Wall Street is locked out. But you have a chance. I am not just watching this happen. I am betting on it. I am moving my portfolio right now to catch this wave. If you want to see exactly what I am buying, and if you want to see the trades I am making in real time, click the join button below. Become an insider member. This isn't a sales pitch. This is a survival strategy. I am tracking the breakout live. I am showing you the metal I am stacking. If you want to be on the right side of the wealth transfer, you need to see this. It is late Saturday night. The clock is ticking. You have 24 hours, 8 p.m. Eastern. That is the deadline. The Chinese are ready. The billionaires are ready. The sovereign wealth funds are ready. The only question is, are you? Are you holding the metal in your hand? Or are you holding a piece of paper that promises to pay you someday? Monday morning is coming. The sun will rise. The markets will open. And you have a choice. Are you going to trust your own eyes? Or are you going to trust the man on the TV screen? Because I can promise you one thing. When you turn on CNBC on Monday, they will not tell you the truth. They cannot tell you the truth. They will downplay it. They will call it a glitch. They will call it a temporary spike. They will bring out an expert in a $5,000 suit who says silver is volatile and risky. They will do everything they can to keep you calm. They need you to stay in the system. They need you to hold their paper. They are like a weatherman telling you it is a sunny day while a hurricane rips the roof off your house. Do not listen to them. You have the data. You have the timeline. You know the machine is broken. But knowing the price is going up is only half the battle. There is a much bigger danger waiting for you, a danger that has nothing to do with charts or oil prices. It has to do with the government. In 1933, when gold skyrocketed, the US government didn't just sit back and watch. They confiscated it, they made it illegal to own, they sent police to open the safety deposit boxes, and there is a law on the books right now that allows them to do it again with silver. But there is a loophole, a specific type of silver that is confiscation proof, a type of metal the government cannot legally touch. If you hold the wrong kind of silver, you could lose everything. If you hold the right kind, you are untouchable. I break down exactly what that loophole is and the specific list of items you need to buy in this video right here. Click it now. Do not wait for the executive order.